All right, so make sure you add this stock to your watch list because this stock is set to explode for potentially the short term. But for me, this is going to be a mid-term swing trade, and I have plenty of time with the call options that I ended up buying. So I'm going to walk you through why this stock is at such an ideal price and ideal time to be buying now, why I think the bottom's there. And in terms of the strategy we're going to be using my favorite strategy, the gap fill reversal to fill the gap above. So I'm going to walk you through that strategy. But in terms of this stock, it has a strong history of correlating very, very well with my strategy, with a very high win rate, with huge upside short squeeze potential. Let's get into the ticker. Let's get into the analysis. And the best part is, guys, the call options are so cheap right now and they're in the money, right? And you have plenty of time, 71 days till expiration. They expire on December 17th. So I'm going to walk you through this opportunity because a situation like this, guys, it is extremely rare where you can find a stock that has huge upside potential, that has plenty of time on option contracts, and that has a strong history of short squeezing, and it's currently at its oversold key dip buying level. It's a very rare opportunity, for something like this, especially like with the options, like I stated. So let's get right into it. So the ticker symbol is going to be BBBY. I'm going to get into the charts. I'm going to get into the analysis. I'm going to get into the strategy on why I think this is going to explode. Remember, this is a midterm play. So the beauty of this is, you can buy a couple contracts, passive income, just let them ride out, right? So I'm going to walk you through the key levels in terms of downside, where you should be cutting your losses, in terms of upside, where you should be taking profits. And then in terms of now would be the time to get in because we got that bullish confirmation I was looking for. So I ended up buying the contracts when it was at $15.30 today. In terms of the contracts, guys, these are the contracts. With options, make sure you stay in the money and give yourself a little bit more time than you expect. So if you're expecting to have that stock to explode for the short term, it's really best to give yourself a little bit more time unless you're just day trading it. But in terms of swing trading, what I've, learned is you really want to give yourself some extra time. So with this particular situation, this is meant to be for the midterm. For the short term, it could have a nice move, but just know in terms of my thesis and my analysis, this is meant to be a midterm play. Hence why I'm getting the December 7th, why I bought the December 17th contracts that expire in 71 days in the money strike, $15, and look at how cheap they are. You can get filled in between the bid and ask at the 180s. Look at the volume. The volume on these is at 3,500. Those are the contracts that everyone is buying on this stock. If you go throughout the history of the volume right now, that's where the volume is. Everybody's buying those contracts. They see the potential, they see the opportunity, and the in the money is going to be your safe strike. Stay in the money, right? So now let's get into the play on why I think the bottom is there, why I think this is set to explode. The strategy we're going to be using is the gap close reversal to fill the gap above strategy. So what does that mean? That means once a stock fills a gap, you can see right here, the stock had a gap up. Well, it filled the gap. This red line, this blue line, $14.98. It recently filled that gap at $14.98. Right now, it's having its first green day, bouncing back, turning that into a key support level. So it's closed the gap. Now it's turning it into a support level. It's having a reversal. Then what would be the next step? The next step is to try your best to maximize for the gap fill. So this stock has a strong history over time of filling the gaps, waiting to fill above. And you got a gap to fill above right here at 22.20. And if you look at the recent history of this stock, it has had many short squeezes, around this key oversold point level. You have strong support in the 18s. Well, now it's at a better oversold key support level with this gap to fill. As you guys know, stocks tend to fill their gaps, right? And you could just see, look at the history. It has its gap down, it explodes up, it fills the gap. Has a gap down right here, it explodes up, it fills the gap. Has gap downs right here, it explodes up, it fills the gaps, right? Had a gap down right here, it explodes up, almost fills the gaps. Like, you get the point. The short-term recent chart on this, starting from, basically the yearly chart on this looks phenomenal. Just look at the yearly chart, right? You're at its basically best support level. You're at its lowest oversold gap fill point. It's showing signs of a reversal. The volume is strong. And when this gaps down and when this sells off hard throughout the past year, this tends to bottom out fairly quickly. And then it rips up, right? So in terms of the short-term price action, I think you're going to be seeing a sideways channel. You're going to be seeing something like this, where it kind of just trades sideways. We're looking for 15s to remain in the support. And then in terms of, before expiration, give it some time. That's when I think we're going to get either a nice move like this, where it starts trending up and the volume really starts coming up and it fills that gap in the 20s, Or we can get something crazy like this where you have one nice big green day, right? So one of those two things are expected to happen. But guys, just by looking at this chart, you really can't go wrong with it. You guys know I'm focused on the oversold plays that have a strong history of having gap fill reversals, that have a strong history of filling the gaps, that have a strong history of bouncing off their key support levels. This would be the particular play. And you can't really go wrong with those call options. So in terms of stops, right, if you wanted to cut your losses quickly, I would look to set stops right around, let's see, like 1350, right around there. See how it reacts towards 13s. You do have a gap to fill in 13s there, so it could go there for the short term. If I see a bounce off that, that's just an opportunity to add more. So right around 13s would be, potential reaction we could see, but as long as that turns into support, we're still good for the midterm. We have plenty of time. Now the midterm price target, we're trying our best to maximize to fill this gap above, which would be at $22.20, right? If that reacts as resistance, it's going to come back down. If it reacts as support, it's going to explode up to 25s. So we take it one day at a time, but this is just something where it's a passive hold. You really don't even have to check it, right? So in terms of the short term, the range would be 1330s to like $17 in between that range. And then in terms of midterm closer to expiration, with upside potential, we're looking at 22s. And if it starts to crack that 13s, that's where I'm going to be looking to get out personally. So yeah, that's my thoughts on it. That's the technical analysis. Like, just look at the chart, guys. The chart is speaking volumes of how well this stock fills its gaps over time, has a strong history of filling its gaps over time. It's literally filled basically all of its gaps over time. And now you're at that key oversold support level. And look at the yearly chart. Whenever this gap's down, it tends to recover, explode up, gaps down, recovers, explode up, gaps down, recovers, explode up, gaps down, recovers, explodes up, right? So it seems like as long as you're buying at the best prices with a situation like this, for BBBY, as long as you're buying at key support levels after it gaps down, you really can't go wrong with it. And there's also a gap right around here. So you have these two massive gap downs. Now's the time to get in. Like, this is what we do, guys. We trade these oversold plays. We're not looking to buy into these peaks right here. We're looking to buy at the best prices. So this is the chart I'm looking for. These are the opportunities we're looking for. And like I said, they're very rare. And what's even more rare is an option chain like this, where you have 71 days to expiration. The contracts are less than $2 and they're in the money. That's what makes it so great. Like, they're in the money. So that's my thoughts on a BBBY. I'll keep you guys updated in the future. So for me, this is a passive trade. This is something I'm just passively holding this out. I have plenty of time towards expirations. So I don't need to be right for the short term. Say it dips into the 13s for the short term, we see a bullish reaction, then I can average my cost down. Has a negative reaction, then I cut my losses, move on to the next one. But in terms of the contracts, what we're looking at is 50% downside potential, 150 to 200% upside potential. So we're sitting at a 3 to 4.0 risk to return ratio. It's the best setup I can show you at the moment. The chart is phenomenal. And yeah, this is exactly what it is I look for. So I hope you guys enjoyed this video. Let me know what you think, and I will see you in the next one.